stocks this week. The Sensex ends the week well above 17,000. We'll find out if this is the beginning of an overall recovery. The Finance Ministry proposes a monetary limit on the draft guidelines of GAR. We'll find out what this means for your stock investments. And Ambareesh Baliga thinks ILFS Transportation Networks is a smart investment option. We'll find out why. Welcome to All About Stocks. You're watching ET Now. It's comforting to see the Sensex above 17,000, isn't it? Today on the show, we're going to find out what's driving that change that we saw last week. We'll also find out if this is a beginning of a turnaround and if it's going to last through next week. We'll understand what it means you should be doing. If this really is the beginning of a turnaround, should you be buying stocks on Monday morning? And if yes, what stocks should you focus on? Remember, there's an email ID at the bottom of your screen where you can write to us, and you can reach us on Facebook as well. But before we tell you what stocks to buy, we need to find out what happened in the markets over the last week. My colleague Darshan is here with the latest numbers. Darshan.
Well, indeed, it was one of the best weeks that the market has seen, and one of the best months, at least in the near term. Sensex and the Nifty, both of them rising by close to 7% in the month of June. So clearly a very good month, and almost 3% of the gain coming in this week itself. We saw that on Friday, 100-point gain on the Nifty and a 400-point gain on the Sensex. And mainly, it was also the mid-cap and small-cap that contributed 4% gain for both of them. Individually, if you're saying capital goods, the clear outperformer, 13% gain as far as the month is concerned. Power, FMCG, banks, all of them gaining close to almost 9% in trade. In some of the gainers that happened during this week among the Nifty gainers, there was Tata Power up 10%, GSPL up 7%, Maruti and Tata Steel up almost 6 and 5% respectively. And mainly all the news coming in because of the GAR issue, that a little bit of clarity has been brought into it. So clearly one of the best weeks that we have seen in the recent times.
Darshan, I want to bring you back to what you said on GAR. Really, that was one of the things that changed sentiment on Friday. Take us through what happened exactly. Is that what the market was hoping for?
The market clearly cheering the GAR issue that has come in. Remember, this is just the draft guidelines that have come in. But the important factor is, that the draft regulation do indicate that, there will be no GAR as far as the P notes are concerned. So that was a big relief for the market. That is why you saw this big rally that actually came in. And the implementation of the GAR has been deferred to 1st of April 2013. So two big points that actually came out of the draft proposal of GAR. The GAR provision may only be invoked, in case there is an FII as far as the treaty benefit is actually there. So clearly that was one of the points. But remember, these are the draft guidelines, and they won't be cleared as far as they have been approved by the Prime Minister's office.
Thank you, Darshan, for all of those details. Joining us now in the studio is Ambareesh Baliga, the CEO of Way2 Wealth, who's going to help us understand what happened this week and how we should be doing with our stocks portfolio. Ambareesh, thank you so much for spending time with us. I'm going to talk about all of the things that Darshan mentioned in a little while, but I want to understand at the beginning of this conversation, the rally we saw on Friday, 430-odd points. Do you think this will sustain over the next week? Do you think this is the first sign of a turnaround of positive sentiment in our market?
Possibly a first sign of turnaround. The reason why we saw this rally was the expectation that the reform process will start flowing out. At the same time, the Euro Summit, we have been hearing some positive noises from there. That was another major headwind as far as the markets are concerned. So, if that is behind us and we have the reform process flowing out, the sentiment will clearly change for the better. And based on that, we could see a further market rally. But the caveat here is that we have the next possibly 4 to 8 weeks for the reform process to flow out. Looking at the change scenario with the PM taking over the finance portfolio and with the political equations turning out to be slightly better than what it was earlier. So for the reform process to flow out, it will be much easier. But in case over the next 4 to 8 weeks we still see status quo being maintained, I think that will be disastrous. So till then, on hope and based on the sort of flow of news which comes from Delhi, we could see markets at much higher levels.
Okay. So tell me, with the draft guidelines on GAR, like Darshan was mentioning earlier on the show, this is an indicator from the government that they are seriously looking at reform. But is this enough to bring back that FII money that got spooked out of our market?
No, I won't say in totality that this alone is enough. Surely GA was a major roadblock for the FI investment. If this is sorted out, that changes the sentiment as far as the FIs are concerned. Along with that, you also require the other reform measures to start off. I think the easiest off the block is FDI in aviation. If that starts, if that takes off in the next couple of weeks, there will be a very clear signal that this government means business. Because today we are in a situation of do or die. Because if the economy still continues performing so poorly going ahead without reform process, I think we'll be moving more towards 1991, the situation which we are in, than the sort of flowery, great situation which we're looking at. That vision of 2020. I don't think that can happen. So for that to happen, the reform process has to start flowing out now.
So tell us now, as retail investors, what do we do? Do we wait to see if we hear more concrete things coming out of the government, if we see more sentiment improving in the market, or do you think this is the time to get in and start buying up stocks while we see good valuation?
It's time to start buying because we expect the reforms to flow out over the next couple of weeks. And after that, we have seen a decent move in the market. But still, even at these levels, I would say it's the time to start investing. Because once the reform starts flowing out at the ground level, you will have the market possibly up by another 5 to 8%. So better to catch it now. But at the same time, I would say keep your ears close to the ground. And if you see the government faltering on the reform process, possibly exit.
So the advice we're getting right now is, as retail investors, we have to pay close attention to what we're hearing from the government. Ambareesh is saying this is a good opportunity for us to go out and start picking up stocks that we see value in. I'm going to name a couple of those stocks for you later on the show. Ambareesh, tell us, would you recommend at this point that we use an SIP method, or do you think that we should just pick up stocks every time the market shows a little bit of weakness?
I think every time the market shows a bit of weakness, you should pick up stocks. Because if you see the last couple of months, I would say the last 2 or 3 months, whenever the markets have fallen, based on some sort of a negative news, there has been a knee-jerk reaction. There is enough amount of support at lower levels. People are looking forward. People are looking up with hope. So I think, like I said, this is a great time to buy. And any sort of dips you see, and again, this move will not be a one-way move. You'll have corrections in between. Utilize all those corrections to get in.
Off the top of your head, from the blue chip stocks that retail investors tend to like, right now with valuations, which do you think we should keep our eye on?
Again, I would say I would go sector-wise in this, stock-wise. Sectors-wise, clearly, because of the reforms flowing out, it will be infrastructure, capital goods, and banks. And in this, if you're talking about banks, I would surely pick up something like Axis Bank or SBI. Capital goods, I'll pick up L&T and BHEL. Infra, I'll pick up GMR Infra.
This is a good opportunity for us as retail investors to keep an eye out on stocks that are available at this point in good valuations. I want to bring up a couple of stocks that were interesting this week in the way they moved. And I want to talk about Kane, Ambareesh. We saw it come down 6% on Friday because of a block deal.
Yes.
But there are other factors playing on that stock as well. So for a retail investor watching at home who's holding Kane in his portfolio, what's your advice?
So Kane will bounce back from these levels, but for it to move back to those levels of 350, 360 without oil prices going up, I doubt. So I think the upside for Kane, if you are looking from a short to medium term angle, is about 325 to 330.
Would you recommend hold on to it right now? Not panic?
At these levels, hold on, don't panic.
Okay.
But again, exit at closer to 325.
Alright, so when you see those levels on Kane, it makes sense to exit. RIL also was up in trade on Friday after Nico, its partner at the KG Basin, said the D1 and D3 fields of that KG D6 basin could double production if the government approves the integrated development plan. Now, the stock reacted positively. What does that mean for the business in the long term? Could you help us understand this?
Clearly, I think one of the major issues which Reliance or the Reliance stock was facing was the gas production. And I believe that the gas production is linked to the price. And in case post-2014, the higher prices are fixed as of now, I think that will be one major trigger for Reliance. Because what I believe is BP would not have invested that much in Reliance fields if there was no gas. So my belief is it's not more of technical issue. I think it's more of the pricing issue.
So are you right now bullish on Reliance? Are you, where is your...
I would say I'm cautiously bullish. I would still wait for that trigger to happen. I wouldn't mind possibly buying 100 rupees more expensive, but only once that trigger comes.
Alright, so what we're doing right now is we're waiting to hear what happens in the negotiations between RIL and the government as far as pricing is concerned post 2014. And after that trigger comes in, Ambareesh says it does make sense then to pick up that stock, even though it might be a tad more expensive at that point. Let's move on now to our new segment. This one is called Stamp of Approval. Alright, so on this segment, you can send us your buying decision of a stock that you're considering adding to your portfolio, and we will tell you whether or not we approve that call. This week, Usha Shetty has written in. She wants to know if it makes sense to buy Axis Bank at these current levels. Axis Bank ended the week at 1,012 rupees. You did mention it earlier on the show. You're bullish on Axis Bank, so obviously you approve that call?
It made a lot more sense to buy when there was a block deal happening and the stock had come down to about 970, 980. But even at about 1,000, 1,012, it makes a lot of sense because if you look at the performance, last 8 quarters, extremely good performance. And again, when we are expecting the economies to start moving, it's the banking sector which starts performing. And among them, you again start looking at the best in both the lots, whether it's the private sector or public sector. Private sector, you have HDFC Bank, Axis, yes. And in public sector, you have SBI to start off with. So Axis is really a buy for us. If she's looking from a short-term angle, I would say look at price levels of about 1,050 to 1,060. If you're looking from a 1-year angle, I'll not be surprised if you see levels of about 1,275, 1,300.
But for someone who picks up Axis Bank at this point at 1,012, would you recommend she try and hold it for the long term?
You should have at least a 2 to 3 year time frame for something like an Axis Bank.
Axis Bank, interestingly, is a buy whether you're looking at it from a short term or a long term. But I'm just recommending that if you're picking it up now, and if you are a retail investor, then it makes sense to consider a 2 to 3 year horizon. We're going to slip into a quick break. On the other side, we'll bring you Ambaresh's stock picks for the week. ILFS Transport. We'll tell you why you should be buying that stock right now. That's on the other side of the break.